Hello, Chris Worden. Welcome to the First Business Rescue podcast. So what we try and do with these podcasts is answer the questions that you people have got out there rattling around your brains at the moment, and hopefully provide some really good value and help you understand what can be the really complex world of UK insolvency. So enough about me and what we do. I would like to introduce our guest today. This is somebody we work with very closely at First Business Rescue, and it's Gary Addison, the Managing Director of Redundancy Claims UK. Welcome to the First Business Rescue podcast, Gary. How are you doing today, mate?
Yeah, I'm good. Good, thank you, Chris. How are you?
You know what? Yeah. I'm not too bad actually, mate. I can't believe it. We're doing this podcast on the 23rd of March, and it was 2 years ago today that we sent everybody home after the madness started to break out.
Wow. So it's a lesson for us all. I think don't take anything for granted, Chris. That's what I would say.
I mean, Gary, we've been working with each other for a while now. You're a valued partner of First Business Rescue. But for those that don't know who you are or what Redundancy Claims UK do, here's your chance to tell them. It's going out on Facebook, YouTube, LinkedIn, our podcast, and Instagram, mate.
Yeah.
And we're very big in Germany on the podcast. Strangely,
okay.
Yeah.
Excellent. Well, there you go. Unfortunately, Chris, I won't be. My German's not my language. Norwegian is, but hey, that's another story.
So tell us a little bit about you and
Redundancy Claims UK. We're a small business. We're based in Wilmslow in Cheshire. We employ 24 people. And we specialize in claiming redundancy on behalf of directors of companies. We are FCA regulated, which of course protects any director or employee that decides to use our service. But essentially what we assist people doing is maximize redundancy claims, notice paid claims, unpaid wages claims, and unpaid holiday claims, Chris. We initially contact the director once you send an email through to us invariably. We will speak to the director, qualify if they're actually eligible to claim redundancy. And since we last spoke, or since we last put on a webcam, Chris, there has been a number of changes. Certainly the redundancy payment service becoming a lot stricter and a lot more thorough in terms of processing the application. So, for example, the mandatory information now that's required by a director. Well, the first thing is, are you an employee of the company? Have you worked for the company for the last 6 months? If
Gary,
you haven't,
just before we jump into the criteria, if I could, you say you're a small business, but I think you're being a bit modest there. You are the market leader in this, aren't you?
We are the market leader, and we believe, and again through numbers issued by the FCA, we believe we're about 85% of the market, just short of.
Not a bad little small business, then, eh, mate?
No, it's niche. It's very niche. Helping employees claim redundancy is not a service you'll Google and find everywhere. That is for sure, Chris.
So what I wanted to do before we talk about criteria and qualifying, I think that the biggest revelation a lot of people, so what generally happens is we will get an inquiry of a worried director, business is struggling, looking at going in, looking at insolvency as a viable option, and then we'll go, right, you may be entitled to director redundancy. And that blows a lot of people's minds. I can't believe how many people, directors in particular, do not realize that there's a good chance that they will be able to claim redundancy. Why is that, Gary? Why can a director? Because a director, they're going, well, I'm the boss. It's the staff that get redundancy. Why is it I can get a claim for redundancy? Tell us why that happens.
Yeah, well, quite simply, Chris, and I'll use, if it's okay, myself as an example. I was in work this morning by 9 o'clock. I'll be leaving work round about 5:30. So I work throughout the time. I will possibly take a break and take lunch. I am on the payroll of the company. I submit holiday applications to the company when I'm off work. I am no different than any other employee of the company, and that's recognised by the redundancy payment service. So a director you can be the controlling shareholder, 100% shareholder, and a one-man band. You can be a director and the only director, and you are still able to claim redundancy.
So let me get this right, because we have lots of people out there that are one man and one woman bands, who they're in their head, they're self-employed, although they've got the limited company structure. They all potentially could claim director redundancy. Okay. Now, again, with director redundancy, like you touched on earlier, there is some qualifying criteria. What is that qualifying criteria, Gary?
The qualifying criteria is, have you acted as an employee of the company? And as I said, most directors, and by the way, Chris, most of our clients are one-man bands. That's the reality. Have they acted as an employee of the company? I've just given you examples. Are they on the payroll?
Second, Gary, I've got someone in the office next to me. Let me just shut the door.
No problem.
Hey.
So
are they doing it live, isn't it? Eh?
Yeah, that's it. Well, there you go. Are they on the payroll of the company? Which is
What's
really
the payroll, Gary? How will they know if they're on the payroll or not?
Well, there's two things you can do. One is you can ask your accountant, but the easiest way actually is to go into the government gateway. And the criteria for your government gateway essentially is your company number, your NI number, and it will give address, of course, and it will give you the details of have you been on the payroll or not. But invariably, Chris, what happens? The director will be on the payroll, and possibly the last 3 months, 6 months, 9 months, they may have come off the payroll. And the reason for that is quite simply, the company has not had the money to pay them. However, they have still continued to work for the business. So they would still be an employee of the company. Which is really important, because you can imagine a lot of the directors, certainly for the last few months, have not actually paid themselves the full amount. And just remember, I know we've not mentioned it yet, so I'm slightly jumping in, but a lot of the directors use this money to finance the cost of the liquidation, which possibly they would not have the funds to do. So it's really significant we qualify them properly and make sure the mandatory information is available from them.
So I'll come to you. Raise a good point. So a lot of directors out there, the biggest concern when they get to this situation, certainly the smaller ones, is, well, how the hell am I going to pay for an insolvency practitioner? And let's have it right. Even a small liquidation, it's $4,000 plus VAT. Anybody who's quoting any lower, that's a red warning sign for me that there's going to be a sting in the tail. But that's another podcast. Listen, if you're going to liquidate small business in the UK, you're looking at $4,000 plus VAT. How are you going to pay for that? You could use company funds. You could sell company assets if there are any. But like I say, invariably, there's no cash left in the till, or very little. There might not be any assets. So this is like the lifeline, isn't it? It's like you could use this. I mean, give me an example. So I know that you've got to be on the payroll over 2 years. Can I put you on the spot here and test your maths? Or have you got your calculator there? Okay, I am a 39-year-old director.
Yeah.
I know I don't look 39, Gary. I've been on the payroll for over 2 years. I set up just before COVID. What am I due, roughly?
Okay, at below 41 years of age,
Yeah.
You receive a week for every year you've worked for the company.
Okay.
Above 41 years of age, Chris, you receive a week and a half. Okay.
But Gary,
So,
I'm only on minimum wage though, mate. I'm only on like 800 quid a month, whatever.
Right. So what we would do is if you're on £800 a month, and so that's an example, we would ask them how many hours a week do you work for the company? So they're paying themselves at the moment £200 a week. And I have to use per week, Chris, because the government still work on old currency. They work on per week. So you're on £200 per week. You've been working 48 hours a week. So what we would do is we would apply the national minimum wage, which means £8.91 an hour. And by the way, it's due to increase very soon from the 5th of April. And then we times it by the hours worked. So the director would be claiming it £200 per week. And we would be claiming it £427 per week.
Just stop that there, because that's the important bit. Why to you? Because I've even had accountants, because I speak to directors, accountants all day, every day, and they're like, no, you know, they've done the calculation on the government calculator, and it's peanuts. And then because you're more than doubling that entitlement, aren't you?
Absolutely, yeah.
Okay, cool.
And another example, Chris, is, and it's all to do with the Employment Rights Act 1996 and the current case law, which we have an understanding of. So, and I'll give you an example. There's a director, and he will tell me he's actually been paid in full. So you can say, well, there's no arrears of pay. So he would not put an application in for arrears of pay, unpaid wages, where actually he's been underpaid. He's been paying himself, in the example you give me, at £200 per week. And he should have been claiming at £427. So the arrears is £227 a week. It's capped 8 weeks. So we would roll it back, choosing the best weeks, rolling it back up to a maximum of 2 years. And there's no way a director would have any understanding of that unless they understand the case law and what's behind it. It's not about filling out an application form. It's about understanding employment law, Chris, in order to maximize a claim.
So Gary, I'm a guy who needs things really simple.
Yeah.
What would my claim be?
Right. So let's give an example. It's a really simple example. After fees and after taxation, remember, only statutory redundancy is tax-free. Notice pay, unpaid wages, unpaid holidays, you've got to knock about a third off, even from our calculator. So Chris Worden has worked for the business for 10 years. He's 38 years of age.
What about if I've worked only 2 years, mate? We'll go do a 10-year example, but what about...
I'll do a 10-year example, and I'll do a 2-year example. Okay, mate. So at 10 years, you'll receive around about £7,500 at 38 years of age. If you were 58... you'd receive about £10,000 after fee and after tax. So that translates to, if you've been with the company for 2 years, then the likelihood is after fees and tax at 38, you're going to receive about £3,000.
Yeah.
At 41 years of age and above, you'll receive about just over £4,000. So, by the way, the devil's in the detail. It might be slightly more, but I'm being just estimating it.
Conservative. No. Okay. But the main thing is, listen, with an average, a minimum cost of liquidation is going to be £4,000 plus VAT.
Yeah.
In most cases, and we must have referred hundreds of people over to you, your redundancy claim is going to cover a liquidator's fees. And depending on how old you are, how much service you've done, it might put some money in your back pocket as well.
Absolutely. Yeah, absolutely. Because what you've got, Chris, again, just to reiterate, you've got statutory redundancy at 427 a week for 2 years. You have the notice pay for 2 years. You have 8 weeks of unpaid wages, and you have 6 weeks of unpaid holidays potentially. So so what happens is at the start of the year, or most applications we're putting through, and I do get visibility on a weekly basis, you probably, most of them, it might be a couple of £100 either way, just over the 4.8 or just below the 4.8, but it does invariably cover the fee, which is key when at that moment in time the director typically does not have the money to close the company.
Another question I get, Gary, thank you for that explanation there, is, well, where does this money come from?
The money is paid by the government, and it's the National Insurance Fund. So we all pay national insurance, and a small amount of money is set aside in the event of a company closing and an employee is able to claim redundancy. And remember, Chris, this has been around since just after the Second World War, and also remember. And if you take Thomas Cook, where there's 9,000 employees only from a couple of years ago, which closed down, and there's no difference between being an employee of Thomas Cook or running John Smith Limited with one man and one person. As long as you've been acting as an employee, you still have the same rights. You're still paying into the National Insurance Fund, and that's why it's key. You're on the payroll at least at some point during running your business.
I mean, do the government just not want people to know about this?
In truth, Chris, the answer is probably yes, because they're there to, you could argue, to protect the National Insurance Fund. The National Insurance Fund, by the way, is our fund. So I would say as few people know about it as possible would certainly suit them.
Well, we're going to change that, aren't we? One inquiry at a time. So, Gary, I really appreciate you coming on, mate. I know how busy you guys are. Oh my word! Can you hear me, Gary?
I can hear you. Yeah, I can still hear you.
So terribly, my camera has just run out of battery. Would you believe? Right?
No problem. But I can speak up anyway.
Some would say this bit is an improvement, so I'm just going to keep on talking. Okay, mate?
Yeah.
I really appreciate you coming on today. You're, like I say, you're a really valued partner of First Business Rescue, and I know many of our clients are so much better off for coming across Redundancy Claims UK. Now, is there anything that you would like to say to sum up, mate?
Yeah, I think what are the gotchas with redundancy? Clearly, Chris, you need to be on the payroll of the company. If you've never been on the payroll of the company, you will not qualify, Chris. So you just need to remember that's really the big one. Apart from that, you need to speak to us, and we can let you know if you qualify, and we can give you the value of the claim. And I'll go back in summary to this is a lifeline for a lot of directors. Chris, I do watch your videos and what you do on a regular basis, whether it's advising people on bounce back loans, whether you should close your company, how to close your company. And a lot of this, Chris, does come back to directors being able to claim redundancy, which means they can complete their legal obligation under the Companies Act to close the company correctly, because a lot of them are trading insolvently, Chris. And we will qualify as many directors as required. I mean, we speak to between 150 and 200 directors per week, Chris, per week. And a lot, if they don't go ahead immediately, usually come back to us. So it's a volume-based business, but we treat everybody the same. We believe we give the best advice in the industry, and they should look to you first. They need to speak to you first, Chris, because you need to explain to them, is the right route to liquidate your company? It might be they need to dissolve the company, strike off the company. Obviously, that's not a field of expertise for me, Chris. But once they come on to us, we will do the rest and hopefully help them deliver a redundancy claim, which will help them close the company.
So listen, if you're watching, listening to this, before you ring Redundancy Claims UK, it's important that you take insolvency advice. Now, obviously, you can come to First Business Rescue and we will give you some good, solid, director-focused advice. But in the interest of honesty, there are more than us out there that can help you. Just always make sure you check the reviews of the people that you're speaking to first before you bare your soul. Okay. Gary, I think, we're pretty done. you've been great, mate, and thank you for spending the time. Where can they find out more about Redundancy Claims UK or Gary Addison if they want to?
Yeah, I would suggest our website, www.redundancyclaim.co.uk, Chris. Click on the website. And just finally, Chris, and I'm afraid I've missed something which is pretty critical. The reason you speak to Chris Worden before ourselves is that you can only claim redundancy if you go through a formal insolvency process. Sorry about that, Chris.
No, you're right. So no, it is an important point, and I've missed it as well, mate. If you have, and this is one of the things people need to weigh up: should I strike a company off? Should I liquidate? Well, remember, if you got a bounce back loan, you can't strike the company off. But if you strike a company off, you are not entitled to redundancy. This is only if you go into a liquidation scenario, isn't it?
Yeah. It is.
Gary, you're an absolute gent. Thank you for joining me today. And I know that some of our listeners and viewers will have got a lot from your information. Guys, whether you're watching this on YouTube, LinkedIn, Instagram, or Facebook, or you're listening it through the First Business Rescue podcast, thank you for spending the time with us today. And I wish you all the very best. And yeah, we'll catch you all soon.
Thank you. Thanks, everybody.